Today we'd like to take you to a country shunned by global investors to discuss our favorite current position in the land of La Dolce Vita. The company, Telecom Italia, controls Brazilian and Italian telecom operator TIM.
Now, just like so many other businesses in Italy, Telecom Italia is the cheapest telecom in Europe. It's one of the cheapest in the world. This is coming at a fairly interesting time because the land of Ferrari has finally started embracing fiber. As Telecom Italia has had this accelerated fiber rollout over the last basically year and a half, it will finish in the next sort of 12 months. Italians actually have started accepting the fiber product, and similarly, actually, even though handset sales during the triple dip Great Recession that Italy has lived through, handset sales have been fairly mediocre. But even it's been steadily rising that the LTE penetration has also been somewhat in line with where France and Spain were at this point of the build out. And so as Italians finally start embracing speed, the decade-long price war that the country has undergone has finally stabilized and has actually started reversing. Now, unsurprisingly, because while Telecom Italia actually has fairly decent margins, its peers that have lower scale and lower incumbent operations are basically earning close to zero on an economic profit basis. And so some pricing actions were absolutely necessary for the rest of their peers to invest in LTE networks. The economics of the business did not support it. And so you've had most of the peers, and now the third and fourth players have now combined to become the new number one. And so you've had a much more benign pricing environment over the last couple of years. And that's a very good thing, because in our base case scenario, we're assuming that the pricing environment remains benign, but that this fiber and LTE penetration will drive pricing plans higher, because these plans obviously carry additional revenue per user. There's add-ons, and then there's also sheer pricing improvement as users migrate from legacy plans to LTE/fiber. So pricing and speed are interesting. They're more medium-term drivers. The near-term reason why we got excited for Telecom Italia is because the CEO was replaced about a year ago, and when he came in, he doubled cost-cutting efforts. These efforts are still actually not fully appreciated by the sell-side consensus. So unbelievably, even though it's public and they're over-executing on their plan, you still have that ahead of you. But what's also interesting is that Vivendi, through its 23% ownership of the company, has come in and started to reposition the strategy, the go-to-market strategy of the company. And through its ownership of Mediaset and also its content at Canal Plus, instead of rolling out fiber and just being a dumb pipe, Vivendi wants Telecom Italia to actually be a full-scale cable telecom operator and basically bundle the services. Now, when you bundle the services, your churn goes down dramatically. And here's the chart that shows you what bundled churn across Europe looks like relative to Telecom Italia's own churn. We're not assuming this makes an impact for conservative reasons, but if it does, our base case scenario of customers, which you see here, will dramatically outperform what we think is basically going to be a flat shareholder base, because it's a low competitive environment, low churn though, lower gross ads.
Now, here's a quick fun fact. Italians love to talk. I think these guys might be lost. But Italy is one of the few countries where voice minutes are still increasing, and by double digits. Yep, definitely lost.
Now, as a result of the pricing and cost-cutting actions, as well as LTE has been totally deployed at Telecom Italia, fiber will be nearing the end of the deployment in about a year's time, so CapEx is coming down. That will allow the company to deleverage. As it deleverages, it will save on interest expense, further improving free cash flow. So we think that in our base case scenario, leverage is coming down from a modest just north of 3 times today to actually under 2 times in the next few years, which gives it a lot of wiggle room for credit rating agencies to upgrade it. In fact, credit rating agencies should have already upgraded it in 2016. It's already hitting all the metrics. Once it upgrades the company, we believe the ordinary shares will be getting the dividend again. In the meantime, we actually own the saving shares. We like the saving shares because the company wants to simplify the share structure, and so we're getting ordinary shares eventually if they actually do this conversion. We're getting ordinary shares for a 20% discount, and we're getting paid to wait. It sports a healthy dividend today. And so they can take their time to simplify the share structure. The longer they wait, the more cash we receive, and the discount has already blown out to average levels. So we like the savings shares, but with modest improvements in EBITDA over the next few years, as you can see here, because of this leverage and then the reduction in leverage, we have an outsized effect for the performance of actually the equity value of Telecom Italia. Because that equity is such a small sliver of the enterprise value today, an enterprise value that's fairly underlevered if you compare some of the cowboys from the West and East actually that go into that lever up telecommunications.
Italy is one of those rare telecom markets in the world where regulators have allowed the industry to consolidate from 4 to 3 players. They've allowed this to happen because basically the entire industry was losing money and couldn't afford the LTE build that's ongoing in the country, much less 5G. The whole industry was losing money except for Vodafone and Telecom Italia. Now, as a condition to this merger being approved, the merged companies had to actually license some spectrum to a third-party competitor. And they struck an agreement with Iliad of France, whereby they licensed some of the spectrum to Iliad. When that happened, investors totally ran for the hills, but we think this risk is being dramatically overstated. So there are many important differences between Italy and France. When Iliad came into the French market, ARPU was $27. It drove this down to the high teens. So high teens is significantly above where Telecom Italia's average revenue per user already stands today. Second, Iliad had an incumbent DSL operation in France whereby it could already sell its mobile services to millions of DSL customers. And third, it was able to actually sell SIM cards over the internet. And so that is actually forbidden in Italy. You need a physical verification of identity. And so that's totally not possible for Iliad. So we think that this Iliad risk is being dramatically overstated in the market if and when they finally do come into the market. Now, the irony of Iliad's name is not lost on us, as Homer's tale describes a protracted attempt by the Greeks to conquer Troy, and it's only successful in ending the lives of some fated heroic men. Isn't it ironic that despite repeated attempts, the company has unsuccessfully conquered new geographies? Now, the other major overhang is the market entry of NL Open Fiber, and as you can see by the name, NL is rolling out fiber throughout Italy, and it's got commercial agreements with Wind and Vodafone whereby they will lease these and then offer their own broadband service. Even if they take 100% of Telecom Italia's wholesale revenue in these geographies, we're talking less than 2% of revenue and less than 4% of cash flow. So while it is an increase of competitiveness, we don't think it's really that material for the company. Now, where it actually makes it more interesting is the government, which controls NL and which owns half of NL Open Fiber right now, has long been trying to buy Telecom Italia's fixed line infrastructure away from the company. Now, infrastructure in the telecom industry trades for anywhere from 12 to 22 times cash flow. Relative to Telecom Italia's 5 times cash flow valuation right now, almost any valuation that they could agree upon would be accretive to the current company. And where it makes it even more interesting is that it puts Telecom Italia in play. Deutsche Telekom has made a bid in the past, and Orange has said it's interested in potentially buying it. So we actually like the entry of NL into the space because we think it catalyzes a potential, basically, infrastructure monetization and subsequent potential sale of the company.
Now, we've been following Telecom Italia since 2014, and we kind of like the fiber story, we like the LTE story, we like the restructuring story. Then the new CEO came and doubled the cost-cutting efforts, and basically that was a result of Vivendi's 23% ownership of the company. Now, Vivendi is of course controlled by Vincent Bolloré. We've already done a YouTube video outlining our investment thesis in Bolloré, which we also have an investment in. But now Telecom Italia finally has a board and a key controlling shareholder that finally looks at the world through a shareholder value lens. Of course, this is not going to come at the expense of customers, but we finally have a sort of pro-value oriented board. That's what got us over the hump and is one of the major preconditions that we look for in most investments around the world. Now, we think, just taking our quantum mechanics lenses on for a minute, we think that the range of possibilities for shares of Telecom Italia are clearly skewed to the upside. Its pricing has bottomed, cost cuts are coming through. Brazil has bottomed, Italy has bottomed, the valuation is bottoming. It's hard for us to engineer a scenario where we actually lose money. But then, more importantly, the preconditions are in place for very positive performance. So obviously, the oversight that we just talked about is very important. It's a non-cyclical business. So even if Italy quad dips into a recession, you're not looking at sort of any alarming scenario for shares of the company. It's got basically incumbent style ROIC, while all of its peers have weaker margins and ROIC. So it basically rides the coattails of these weak competitors in an improving market. And we think that actually Italy has already been demonstrating and will continue to demonstrate solid evidence of a complete macro recovery. So we think that shares of Telecom Italia are right in every way. And accordingly, it's in early 2017, it's our second largest position, actually. So thank you very much for watching. If you want to check out the Vincent Bolloré video, you can do it on our YouTube page. And have a great day. Thanks for watching. Hope you learned something.